Get started, I wanted to just welcome everybody to our session on TMT panel. We have with us today a very esteemed panelist, which covers actually a lot of the world. Alexander Peck is joining us from the UK, Danny Schulz from the US, Jasper from Germany, Sebastiaan from Holland, Michael from New York, and Stefani from Paris. Thank you for joining us today. We have three very exciting startups as well. So we'll be starting with a roundtable discussion and then moving on to the startup presentations. And this session will be followed by Michael Wolf's keynotes on the future of media and entertainment. So first, I'd like to just have our panelists introduce themselves. Sebastiaan, maybe we can just start with you, give a little background on yourself and the work that you're doing at Prosus, and I think that would be really interesting for our audience. So if the other panelists could please put yourselves on mute or...
Thank you very much, Ed, and lovely to be here. Thank you for hosting us. So Sebastiaan Vaessen, I head up the strategy team at Prosus. Certainly before I joined, I did not know the company at all, but it's I always say, the biggest company nobody's ever heard of. We have a market cap of 200 billion listed in the Amsterdam Stock Exchange. And we are basically a big operator of internet platforms around the world and one of the biggest tech investors. Of course, our biggest claim to fame is a significant stake that we still hold in Tencent. We still hold 30% of it. And but we also have major assets in food delivery, classifieds, fintech, and recently expanded into edutech as well as a major new priority. I think in terms of our strategy, we're a little bit different from most investors in the sense that I think we are a bit more later stage. Our sweet spot is 20 million to up to 1 billion or even more. We're very long-term focused, but I think another key difference is that we tend to be a bit more focused. Most investors have spread themselves thinly across a wide range of industries. As I indicated earlier, we try to be focused on a few industries and then buy everything we like within that. Global buy and build strategies are right up our alley. Hope that helps. I think you're on mute, Ed.
Alexander, I'd like to maybe introduce yourself for a moment and give us some background on TMT investments.
Yeah, sure. So this is not the first time I'm participating in Nexus. Thank you for having me and inviting me. I'm investment director at TMT Investments, which is publicly traded investment firm. And we focus on early stage startups, Series A, Series A plus, something around that. Since our inception from 2010, we invested in over 75 companies to date. And I, of course, won't list every of the startups that we invested, but what I can be proud of, we have invested early into 2 official unicorns. They are Pipedrive, Bolt. Another post-exit unicorn is Rike. We have also a bunch of other rising stars and pretty good portfolio. And our focus is actually global. We don't restrict ourselves in terms of geographies, in terms of industries as well. As long as we like the team, as long as we like the founders, then we can virtually invest in any type of startups. So I briefly mentioned that we are publicly traded. So this is a bit unregular type of investment firm. So we are open-ended, and we also can invest for a pretty long time. We can sit within the companies for 10 years and over that time. So that's, yeah.
Perfect. Thank you very much, Alexander. Jasper, could you give us some background? Just unmute yourself, please.
Yes, hi. Jasper, I'm a partner at HV Capital. We are a German venture capital fund, as you can hear from my accent, and we are 21 years old. I think the interesting part is the HV stands for Holdspring Ventures originally. So we spun off of a corporate VC about 12 years ago. So we try to follow the path like the Sapphire Ventures and others, and fully independent fund nowadays. We even have Israeli LPs. And what we do is we like to invest multi-stage, so try to back founders on a pre-product, pre-seed phase, and then we can follow on up to 50 million. We invest out of a 600 million fund right now, have 2 billion assets under management at the moment. And companies you might know, because we focus a lot on Europe, are Zalando, Delivery Hero, or HelloFresh that we IPO'd. Current big ones are SumUp and Flixbus. And I focus on software investments, have 8 portfolio companies. I even sit on an Israeli company's board, Verbit AI, might be a unicorn this year, let's see. I have another company with an R&D office, so I'm often in Tel Aviv. And I also invest in media, so I have a Lingo Kids, it's an ad tech company, consumer subscription out of Madrid. Very happy to be here and share those things.
Great, thank you. Michael, could you introduce yourself and give us a little bit of background on the work that you do? But don't give away the ship.
Hi, Michael Wolf. I am the co-founder and CEO of Activate Consulting, which is the leading consulting firm to technology, internet, media, and entertainment companies. And we work with the most important companies as well as tech innovators on developing strategies to grow their businesses, and then increase their revenues, really everything along the revenue cycle from customer acquisition to marketing to pricing. And it's an exciting time to be in these industries. And I'm really thrilled to be here with Ed and everybody at Access.
Thank you very much, Michael. We have a lot of construction going outside of our window. Of course, it just started 2 days ago. So we're trying to deal with that. Stephanie, could you please introduce yourself?
Yes, delighted to be with all of you. So I'm Stephanie Hospital. I'm the founder and CEO of One Ragtime. So One Ragtime is an hybrid model between a VC platform and funds. We invest in early stage tech companies across France and Europe, and the French ecosystem is booming at the moment. So we tend to put tickets from 700K to a few million. We have 27 portfolio company today, and we focus on seeding the company to follow them in Series A, Series B. So we start to have a pretty amazing portfolio with companies such as JellySmack, which is a leading content creator platform in the US, Oma Games in the mobile gaming. We have also on-off in the communication side. So with my team, we focus in a very innovative model with atypical founders, and we love to be backing the French tech ecosystem, which, as I said, is really, really booming at the moment.
Thank you very much, Stephanie. And last but not least, Danny, could you give us a little background on your work at Gotham?
Sure, certainly. Thank you very much. Nice to meet all of you. And Ed, as usual, thank you for having me. Good morning, good afternoon. I am Danny Schulz, co-founder and managing director at Gotham Ventures. We are an early stage fund based in New York. Prior to that, I was many years with Lehman Brothers. And for those of you who may know or may not know, we really pioneered the very common occurrence now of taking Israeli tech companies public on NASDAQ, and have always really been very close with the entrepreneurial community in Israel, many of whom are now in the venture community in Israel. We are an early stage focused fund, as I mentioned. We have invested and backed probably about 50 companies, many of them Israeli. We kind of have a hybrid focus, therefore, both on early stage New York companies as well as Israeli companies sort of accessing the US market. And we, over the years, have been very closely aligned with Draper Fisher Jurvetson out in the Valley. So we have close ties, not just with DFJ, but with a number of the other Valley firms. And, I've been very fortunate to have invested in and nurtured and backed companies that we've sold to Google and Microsoft and Adobe and AT&T and others. And we continue to focus on getting exits done. We're obviously very focused on the SPAC phenomenon for some of our companies. And then from an investing point of view, just to round it out, our current focus is really looking at much later stage companies for a variety of reasons that I can go into. Also in particular, Israeli companies and those focused on sustainability are very close to kind of my own personal radar at Gotham. So I'll stop there. We got plenty to cover.
Great, thank you very much. So I just wanted to just start off by looking at Sebastiaan and I had discussed this in our pre-call about the impact of 5G on media. And really, everyone is looking for this killer application and how the phone and this new era of telecommunication will affect the innovation and services. So, Seb, Sebastiaan, I'd like to start with you, really, to get your thoughts on how, what are the parts of 5G that are most exciting, from a perspective of a media company?
Oh, boy. I think the reason why you start with me is because I'm actually quite conflicted about this technology and the impact that it has. On the one hand, I cannot escape the feeling that every time I talk to people presenting the possibilities of 5G, it's sort of it feels like a technology looking for a use case to basically defend the amount of capital investment that needs to go in there. If I look at our own portfolio of existing businesses, it feels more like a continuum rather than something revolutionary, a continuum in the sense that I don't think it will have a massive impact on our food delivery business, the fact that you have more bandwidth available. That on one side. On the other side, I do believe finally this will help. It's one of sort of the foundational technologies for new industries to undergo a digital transformation. If I look at logistics, manufacturing, transportation in general, I think those industries will benefit massively from the possibilities of 5G. But at the same time, those are B2B industries, right? It's not just technology that these industry need to digitize. There's a huge amount of barriers in the sluggishness of those industries. So I think it will take some time. The immediate impact, I do believe, it has is already visible in China, where you really see a massive rise of on the consumer side, video e-commerce, video-enabled selling, and I foresee that will be a big trend in the West as well.
Thank you, Jasper. Seb had mentioned is that going to affect food delivery? So Delivery Hero, those are Zalando. How do you see 5G affecting some of the companies that you're involved with?
To be honest, not that much yet. Obviously, we see it on slide decks, but those businesses are at least the ones we're backing. And you see nowadays grocery picking up. You probably have heard of big rounds in London and Berlin. But those people are more struggling with the day-to-day operations. So 5G is not having a huge impact on those. And also I know what from Delivery Hero, they're not doing that much. We see 5G more in the space of Industry 4.0, or even some people call it 5.0 nowadays. I don't know why. Because of edge computing and everything, also with remote work on the shop floor, that this opens up. You don't need the old server infrastructure, not even cloud anymore. You can really unlock a lot of potential. And that's where we are screening a lot. And we even see interesting companies from Israel trying to work with German customers and get this going.
Great, thank you. Michael, how do you see the killer applications for 5G, and how do you see that affecting consumers going forward?
Yeah, there are two pieces to this. One is what's happening and what's going to happen with traditional parts of media and entertainment. So whether it's video or it's films or whatever it is that people are going to be watching that they watch today through a TV set. And I think that the impact there is going to be much more about giving a set of people who don't have access to the internet, don't have really reliable or affordable internet, the ability to use all those entertainment services. So that's the things that exist today. But if I look going forward, if I look at the things where there's going to be massive growth in people's time and spend, it's video games, VR, sports, and sports gambling. And in every one of them, 5G is going to make a huge difference. So if you look at sports gambling, in order to be able to place real-time bets, to have very low latency, you need 5G, you need edge computing, all of which is part of those networks. The same thing on video games. If you're playing multiplayer games with hundreds of people, you want very low latency. You want to be able to do it on your handset, and you're not going to want to be in a place where it's tethered. So therefore, I think 5G opens up a great deal more. And even in commerce, I agree with Seb that live stream shopping and other forms of commerce that really require, that involve video, require a great deal of interactivity, 5G will open those businesses up.
Great, thank you very much. Stephanie, I wanted to ask you a different question. You talked a little bit about the French investment and ecosystem, and obviously with the fast internet, with the globalization, do you see the startups that you're seeing in France going global very quickly, or are they pretty much concentrating on Europe?
And I remember when I first went to Israel, I mean, a few years ago, I was surprised to see how international was the Israeli ecosystem. And that was, for me, a real inspiration to think, okay, when I'm going to be a VC and I'm going to back companies, I want them to be as hungry, as ambitious than the Israeli founders. And a long time ago, when we were looking at France, you were on Europe as a whole. We are not thinking it was a place for tech ecosystem, for global players. We have done it now. I mean, we have now, I mean, last year, the level of money raised by tech company was above 5 billion in France. It has been multiplied by 3, but what is more important is that we're starting to have very big companies. We have already more than 15 unicorns coming out of France. I mean, there's been a very, very sharp rise over the last few years. And you know, unicorn, that means valuation, but what matters more is that we're starting to have very big business and all the ecosystem to go at the international level. Because now we have talented founders who wants to make it from France, from Europe. We have all the conditions because we have big countries, we have a talent workforce, we have a lot of development schools, we have a large corporation able to back it. So I do think that the new startup nation now, the new scale-up nation is France and Europe. So I'm bullish about the French tech ecosystem. I'm bullish about the European ecosystem. And you will see many, many founders, I mean, starting from Europe and going global. But what is more important is that many international founders will now choose France as the place to start their business because there's a fantastic ecosystem to be starting your business in France.
Great, thank you, Stephanie. Danny, obviously New York sees itself as a center of the world in terms of finance and media. How do you see the perspective of European companies, or are you pretty much focusing also on companies that are only going after the US market?
Okay, Ed, if you can repeat that, how do I see the US?
How do you see European companies' attractiveness for you, if they're focusing mostly on the European market, or are you pretty much focusing on companies, startups that are looking for the US market?
Yeah, that's a good question. Look, I think, you know, technology to some degree, it depends what we're talking about, whether it's consumer products in the DTC world or whether we're talking about enterprise software. But, you know, technology like capital really knows no borders. So, you know, a software deployment that works for, you know, UK banks or hospitals is still going to be quite interesting, right, for the US market as well. It's just a very large addressable market. And so, you know, we kind of presume the global nature of companies. Now, very often companies will, perhaps in the context of Israel, start in Israel, use Israel as a bit of a beta site, even an alpha site, not really a beta site, and then come to the US, and then go back into Europe, or vice versa. Start in Israel, expand, land and expand in some pockets in Europe, and then make a bigger push in the US. And I can think of several examples that have, gone both ways. So look, it's a natural evolution. It's a big market here. Obviously, we're interested in companies where we can be helpful, and therefore that means companies that have their eyes set on a substantial enough US presence in their business. But again, I think it's just a natural, direction for a company to go in.
Okay, thank you very much. And Alexander, obviously you're sitting in the UK, you've invested in Israel, and would like to hear how you look at the globalization when you're evaluating startups that you invested with. But please unmute yourself.
Yeah, sorry. Yeah, we do investments across the world, and we actually, for the past 10 years, most of the startups we invested were still from US, and but in recent years, we now see that more and more companies and very ambitious potential unicorns, super high growth leading startups, they're coming from across Europe and traditionally from Israel. We invested in 7 Israeli companies to date, and we still are actively looking into new companies in Israel. And in terms of the valuations, is that what your questions regarding valuations of the companies?
I didn't ask about valuations, but if you're on the subject, do you think that Israeli companies are comparatively valued compared to European companies?
Of course, yeah. Actually, Israel for us stands out as opposed to other countries and startups, because, well, historically, why we liked Israel is because it's on one hand, it's a very tiny country where startups just to be a successful and global company, the startups have to think globally day one, because, well, to be a bigger company, you cannot just be a successful company, just local Israel company. And but at the same time, Israel is a good starting point for that for those startups, and so that's mixture makes Israel a very unique country where we source a lot of very interesting and good companies and startups we invest.
Thank you. Okay, Seb, I would want to just ask you a question about, you mentioned how you're spending a lot of time looking now at education, and I was wondering if you think that traditional startups in the media space are starting to impact the way that our students are able to learn, and whether that's something that is one of the trends that you see going forward.
That's a good one. So obviously, because of COVID, we've seen a massive acceleration in the adoption of digital online training platforms, not just with children, but also particularly in the space of corporate training. We've been active in education for, I think, 6 years now, roughly, where we made a number of investments in Udemy, Code Academy, Byju's in India, and even though some of those investments were quite substantial, like 20 million and more sometimes, it was always a little bit of experimental investing for us. We wanted to learn how this industry works, but with COVID and the strong performance of our educational platforms, we actually made a decision that we wanted to go big in this sector. And the word already was mentioned. We did a spec, yes, of a big company in this space called Skillsoft, and we intend to do a lot more. One of the characteristics that we were very attracted by was that this is still an extremely fragmented industry. And as I mentioned earlier, like buy and builds are right up our alley. So we see a significant opportunity here to create a collection, put together a collection of assets that could really help each other and create a what we like to call a global gorilla in this space. So we're very excited.
Great, thank you. Michael, I just wanted to ask you a question about whether you see some of the advances in gaming spilling over to education. Is that something that the technologies that are developed have wider implications, maybe in gamification, better ways to get knowledge into our youth?
Yeah, overall, I believe, and data shows that gaming is going to have an impact on so many interactive activities, and education and at-home education or out of a school environment is going to be dramatically improved as a result of gaming. The ability to apply game mechanics, to be able to use gaming as a way for people not just to learn text, but also to explore. So if you're reading a novel, it's being able to get behind the story. All of that can be done in gaming in a way that couldn't have been imagined before.
Thank you very much. I think we're going to go now to the startups, and we're going to actually start with Lior, who's joining us also from Tel Aviv with the startup PicUp, really impacting the way that people communicate with their cell phones. And Lior, thanks for joining us. And then Lior will present for 5 minutes, and then we'll go back to the panel for questions. So Lior, take it away.
Yeah, thank you. I will share my screen. Can you see the screen?
Yeah.
1 second, it's loading.
Turning up. Okay, you're good.
Okay, so I'm Lior. Hello everyone. I'm Lior, the CEO of PicUp. Thank you very much for having me here today. And let's talk a bit about direct outbound sales of enterprise. When we talk about enterprise sales of products such as loan, mortgages, insurance, mobile plans, the direct sales revenues are going to get to $2.2 trillion by 2025. Organizations are investing billions of dollars in optimizing the sales funnel. So they use software that help them know who to call, when to call, with what product and what offering, and when the customer answers, what to say in order to convert the sale. But in the approaching stage, when the bank is calling me to help me with my mortgage, or my insurance is calling to renew my loan, this is what I see. I see a black screen, an unknown number. I don't know who's calling me. I don't know why. And this old-fashioned and intrusive call experience leads, at least for me, to a very low trust experience. I'm sure for you as well. And this in turn leads to a 50% drop down in the funnel. So it means that after investing so much in the funnel, every second call will just never be picked up. So what do you do? How you prevent losing so much of your prospects after you invested so much in this pipeline? The way we do it is that we actually transform the call experience from what you see on the left, the old-fashioned call, to something which is digital, customized, optimized. So now customers know exactly who's calling them and why. And if it's relevant, they can gladly pick up the phone. Our patent technology is connected from one side to the contact center systems, and we use machine learning to optimize the right message, the right image, in the right attempt, and in the right time to the right customer, in order for the customer, again, if it's relevant, to pick up and speak with the agent and buy. We're connected from one side to the contact center software, and from the other side to the phones of the customers via our partners, which are telcos and media companies. And we then feed back the results of the campaigns to reports that our customers in the insurance, banking, mobile can see, and then can further optimize their outbound campaigns. We also provide additional digital layer over phone calls and additional functionalities such as call me later, such as surveys after the call, post-call notifications, and much more. Those are some use cases of our campaigns with one of our clients, Vodafone. And you can see different campaigns, targeting different audience, different values and different products. And the results are just amazing. After more than 1 million calls across insurers, telcos, and banks, when they hope to increase by 5%, maybe 10%, we are very happy to share that we are increasing sales by 40%. And this is increasing in bottom line sales of 40%. Our business model is very simple. We charge our customers €0.50 per optimized call, and we show them a great ROI on that. And our business results, we started 2019 with pilots only. Last year, we were able to reach 10 million devices, 1 million calls. We helped our customers in Europe, even in the midst of COVID, when they put their agents from the contact centers and even from the lockdown stores to their homes and to connect to their customers. We were able to connect them to our system, and then they improved the call experience for their customers. We received an award of excellence from TM Forum, being one of the top 20 telcos in the 20 startup telcos in the world. We were accepted to GSMA 100, and we received a grant from the Israel Innovation Authority. And judging by the traction that we have now, we are speaking with the largest telco companies in Europe, but also now in the US, also with insurance companies, banks, utilities, and other that wants to use our technology. And we are expected to grow at least 10 times this year and to reach 100 million devices at least, and to be able to provide this service to many customers and to many enterprises that are calling them. And in the next year, I really can imagine very, very large numbers, because the pain is really big, also for the organizations who call and also for the customers. This is my team. I'm very proud to work with such a very good team of experienced and talented people across mobile development, AI, personalization, optimization, people with really high and good spirit. And we know today that we are targeting on optimizing sales, but we see that the human touch is very important, especially today in COVID. And our technology is combining the personal with the digital powers. So basically, this is what we see as the right combination. And we call you all to join us in this amazing journey and in our common ground and in our vision and mission to charge every call with digital powers. We're starting with sales calls, but we can do it also with support calls, service calls, and we see the traction, delivery calls, you name it. So I don't know if you hear it, but the future is calling. So just pick up. Thank you.
Great, thank you very much, Lior. I think that was a great presentation. Also goes a lot towards a subject we didn't get to on personalization. So panelists, do we have any? Danny, would you like to start off with a question? But you're on mute. Danny, you're on, we can't hear you.
I think I just jumped in there. So thanks for the presentation. It's pretty cool. One question, how does it work from the technology? Do I have to install an app? How do I see those nice graphs on graphics on my phone?
Yeah. So we know nobody likes to install apps. So we're working with large media companies and telco companies. We embed our technology into their existing apps or their existing even SIM cards. The customer, it's transparent for the customer. You just need to approve that you want it or not to, and just to receive those kind of calls and more information and more transparency over phone calls.
Thank you.
Okay, we're having a problem, Danny, with your audio. If you're able to give us another try on that. Alexander, do you have any questions you'd like to bring up?
Yeah, Lior, can you please maybe give us more detail on your monetization, how you charge your customers?
So basically, it's very simple. The companies are using our technology to target their customers and to show them those screens and to optimize the sales. And they're paying us regarding the volume. So let's say they are doing 100,000 calls per month. They pay for this volume. And we charge per contact, not per call, because our target is as theirs to reduce the number of calls. So we charge per contact. So they can call this contact 4 times or 10 times. we reduce the number of calls and we charge per contact, and then we help them increase their sales and increase also the customer satisfaction.
Right, but is there any the minimum that you charge them, or they?
Yeah.
Let's say they.
Yeah, of course. We are using.
Mhm.
Sorry.
Sorry, yeah. Even if they don't use your service, for example, do you still charge a minimum fee from your customer?
Yeah, we have a minimum fee, but we're working with very large enterprise, and once they start using it, they love it. So they actually expand it across other campaigns. So we didn't encounter this problem. And we also have a model with the carriers, which is a revenue share model. So let's say I'm using the telcos for providing this, and the insurance is calling. I'm doing a revenue share of the insurance revenues to the telco that is providing it also to their end customers and to their business enterprises.
Hey, Danny, try again, if it works.
Yeah, I backed out and came back in. Is this better?
Yeah, perfect.
Yeah.
All right, excellent. So I enjoyed the presentation. I like the notion of enhancing the close rates and trying to make a more personal connection with the anonymous. That's kind of an important need we've got in adopting new technologies, and I'm not going to go into that, but I do have a question on what you told us when you talked about the 40%. Can you define what you mean by that? What is the 40%, and how do you define your sort of what was the phrase you made? Successful call?
Just sales. It's really crazy stats. We didn't believe it, but what happens? We take a control group and a pickup group. They call, let's say, 10,000 calls with the control group without pickup and 10,000 calls with pickup. And let's say they have a conversion rate of 8% with the control group. 8% of the people are buying the service. With pickup, 12% of the people will buy the service, or 11%. So we increase the number of sales by 40%. And the way we do it is not actually by increasing the answering rate. The answering rate usually stays about the same, but the ones who do answer, the chances of talking with the agent and buying are more likely. So some of the people prefer not to talk. So we reduce the number of calls, and we reduce the costs for the contact center. But the ones who do answer, after they know that, let's say, AT&T is calling them about their mobile plan, and they pick up to answer, they are more eligible to speak with the agent, not to hang up in the first few seconds, and also to buy more. So we have like a qualification stage.
Have you done A/B testing on the different types of not offers, but interactions that you're sort of promoting to get this lift?
Of course, we didn't get to 40% in the first days. It took us 3-4 months of testing different images, different messages. Yes, it's not something, we are magicians, but not that strong. We need some time to do the modification. But after testing what works best for each audience, we're able to reach those kind of
Thank you. Okay, thank you very much, Danny. Thank you, Lior. We want to go to our next startup, Avishai, Trendemon. Thank you, Lior, and we'll have a chance to talk in the backstage.
Can you hear me?
We can hear you, but you're not sharing your presentation. You're sharing your platform screen. Okay, there we go.
Perfect. Thanks, Ted. Hi, everyone. Great to be here. So maybe before I jump into what Trendemon does, just give you a quick context as to why I started the company with my co-founders. So before starting Trendemon, I was leading a marketing agency, B2B marketing agency, helping companies with integrating their marketing technologies, as well as carrying out digital marketing campaigns. My biggest challenge in those years, was how do I show my customers that the work that we were doing for them, that their investments in digital marketing was actually helping them close deals. That was the trigger for starting Trendemon, to help companies understand how their investments in digital marketing are impacting sales and find ways to personalize the experiences. Now, very similar to what Lior mentioned from PicUp and using data to personalize and generate better experiences that convert more, we're doing the same thing for B2B companies as they're improving their digital journeys. So where we are today, Trendemon and at the end of 2020 passed $1 million in ARR. We grew only by 30%, but without raising any funds, and we're cash flow positive. And alongside me, we have an amazing two co-founders, Lena and Hallel. Hallel also founded a MarTech company, which was acquired, and Irani Yaniv joined us after selling Perfecto Mobile to Perforce as chairman in November this year. Also among our investors is Dentsu and Sebastiaan Ventures from Japan. Some of our customers today include names like Walmart, Panasonic, Rakuten, as well as B2B companies, Tenable, Sisense, Frontline. We're alumni of SB 101, Bridge, SAP, and IBM. So marketing technology is booming, is growing at a rapid pace, especially after COVID. But I think it's also an intimidating field probably for many investors. It seems very noisy, very crowded. What I'll try in the remaining 3 minutes is try to tell you how we differentiate ourselves in the space, what is the value that we bring to our customers, and where we're heading. So what's the problem that we solve? In most B2B companies, journeys are long. They are heavily dependent on research and education, and they usually involve multiple people. But what most companies still see to this day is only the tip of the iceberg, basically what happened just before a sign-up was made. What actually happened is much longer, much more complex. We're talking about people coming in, engaging with content even before signing up from different channels, from different areas. And even after a sign-up has happened, it could take months until a deal is won. So what Trendemon does is we're helping them to map those customer journeys that you're seeing here, visualize them, and attribute the impact of their digital assets to business outcomes. So for example, to know how their website, their blogs, their webinars are actually contributing to revenue, which today is an important question because everything today is almost digital. All of the entire journey, if before 2020, it was divided between offline and online, today, especially in the B2B process, the vast majority is almost entirely online. So attributing those assets is important. We see that only 15% of digital assets are contributing to sales. And basically we help them personalize their customer journey on their site, showing the relevant content at the relevant time. Value to our customers, they are struggling with mapping journeys, assessing the impact of assets, and not able to personalize. We're helping them to solve those 3 pains. And the outcomes that we've been able to generate, so cybersecurity Tenable, seeing uplifts of $2 million in opportunities accelerated. There was a question, how do you measure acceleration? That was, I think Danny asked Lior before. We're A/B testing groups that were optimized versus non-optimized and able to then say what was the uplift between them. We have audio code seeing an uplift of 18% in SQLs, WalkMe, and so forth. This is our dashboard. This is what the customer sees, how much of their pipeline has been accelerated through the use of personalization, and also how their website in general is helping contribute to sales and revenue. This is our position in the tech stack. When we talk about marketing, you have to differentiate between tactical tools and platform solutions. Trendemon solves for this lack of management on your owned and operated digital assets. There's a lack of visibility to those journeys, especially at the account level, and we help connect those into the CRM, into the marketing automation. Last 10 seconds, we have had a very good quarter after challenging 2020. We've been able to grow, had a record Q in terms of new ARR, great expansions, seeing more logos than in 2020, and still working to deal with increasing the pipeline, reducing churn, all the stuff that B2B companies focus on, but doing it from a cash flow positive position. That's it. If you want to hear more, if you want to listen more about what we do, about the technology, things that we can't get into in the 5 minutes that we have, I'm happy to jump on a call and discuss.
Thank you very much, Avishai. Now I want to move over to the questions. Stephanie, would you like to lead off? But please unmute.
Sorry, and thanks, Avishai, for this great presentation. You're clearly operating in a very nice ecosystem. However, how are you going to really fast track in terms of sales? And who could you partner with to really be less dependent from salespeople and rather focusing on the automatic distribution?
Right. So $1 billion question, right? How do we scale cost effectively? And I think we have several partners, strategic partners that we're working with, like HubSpot, Adobe, Salesforce, in order to complement and integrate with their offering. I think the point that you mentioned about having a scalable, easy to implement solution is definitely a focal point for us in the coming year. That is also the big challenge in personalization. Personalization so far for many companies has been challenging because it requires a lot of effort. And through the use of data and technology, we're able to allow even small startups to do effective personalization and increase their close rates. But definitely for us, the way forward is to have a fully self-service solution that is able to address, all kinds of companies, not just Walmart, but also startups that want to get better use and better control of their journeys. We're still figuring it out. I don't have all the answers. We're still kind of growing in our steps and ACVs. But that's definitely I think the future for any solution is integrations and scalable implementation.
Thank you, Stephanie. Thank you, Avishai. Do we have any other questions? Jasper, do you have anything you'd like to ask on that?
Yes, thank you. I would love to understand how you pitch this. What's kind of the moment of wow for customers where they choose your solution, because the space feels a bit crowded.
Right. I think that marketers are overwhelmed with different tools that solves part of the problem. And I think that we've been operating for a little over 4 years, almost 5 years. And we've started out also by solving a part of the problem, the attribution. I think what marketers see when we show them Trendemon is they see a complete solution that helps them understand their customer journey, understand what is working, and also gives them the tools to effectively influence them and operate them. And that is what they're essentially looking for. It is a crowded space because I think it's a low threshold of entry. Lots of companies can get in with tactical solutions. I think, but for platforms and to offer holistic solutions, there are not a lot of out there. We are usually the second or third largest investment in terms of marketing spend, technology for the companies we work with. And I agree with you, they don't give the time of day for a solution or for a tool that doesn't solve for that entire problem. They're trying to do those things manually. They usually don't succeed in that. And this is, I think, where we have the advantage in this space, which is challenging, but I think it also has a lot of resources and a lot of pains as well, still.
Okay, thank you very much. And now we're going to be going to our last startup, Aviv from Texel. Thank you, Avishai.
Hi, everybody. I'm just sharing my screen. Okay. Good. Are we on?
We're good.
Can you hear me? Can you hear me well? I'm good. Beautiful. So my name is Ili. I'm the CMO of Texel, and we've created a product called Engagement Cloud. And Engagement Cloud allows streaming companies to really expand into new dimensions of entertainment and to create an engaging experience for the viewers like was never possible before. And I'm so happy that some of the people that I've seen earlier in this session, the investors, are coming from the domain. So lots of stuff that I will say will sound very familiar. So all of you know that we are living in a streaming era, and OTT companies and streaming companies really are interested to become more relevant than ever. There's a first competition happening as we speak, and they really want to include new dimensions of personalization and social viewing, and offer that as an integrated offer together with their content. So 2020 was the point of no return. The largest number, over 1 billion viewers exist today for streaming services, paid streaming services, and very few are ad-based. And the competition, you know, with the case of Disney coming in and all that, became very, very severe. And this is $171 billion this year. So there's a lot to fight for. So really content, which was really before that was the baseline, is not a differentiator. I mean, you invest 50+% of your budget on producing content, and then you wish for the audience to come for it. Technology, it's a much more scalable way to attract audiences, and that's why it is perceived as the top line of the streaming companies. So our service is really aimed at streaming companies, streaming services, the Netflix of the world. They could be segmented, perhaps only in sports, perhaps in music, in live, or it could also be VOD and other modules. And also we offer the same service to cloud providers that offer media services, and I will talk about it in a second. Basically, just in a nutshell, to show you here on the sketch, the idea today is to offer viewers multiple feeds that comes from multiple video sources. That could be Zoom, that could be from online, having influencers coming in, to have social networks, all that integrated into the streaming service and offered on multiple screens to create multiple experiences. So perhaps just take, for instance, me wanted to have a watch party together with 5 of my friends. So I invite them through my mobile. I have them on my TV. We see each other, hear each other, having different commentators coming from the online world. And all that mashed experience is happening on top of the stream that was originally created by the streaming company. That type of experience of multi to multi requires a very sophisticated and deep technology infrastructure that doesn't exist today in the world. Let me show you just a brief story of T-Mobile. T-Mobile just recently is launching a service called Magenta, and on top of which they will be launching engagement cloud. T-Mobile or Deutsche Telekom has happened to be also our investor. So basically we supply the co-viewing capabilities for multiple devices. And like you see here in the small photos, you can see a game, and you can have multiple sources. That could be chat, that could be video coming from multiple angles, that could be me and my friends watching each other and talking to each other, and all that is going live this quarter. So that is one implementation of our sports. Another implementation is together with our major strategic partner, Rakuten Media from Japan. So Rakuten is building a media cloud. Media cloud is their answer to AWS media services. Practically, it is allowing OTT companies who reside on their cloud to stream content from. They have 14 channels of their own, and many, many more will be residing on their cloud, and they will be using Texel both as an infrastructure for multi to multi, and at the same time creating engagements. That means social engagements and personalization ability over the stream. So Texel basically is the only single and complete enhanced streaming experience solution that is controlled from one place. It's a white label solution that is given to the streaming companies, with which they allow social experiences and blending online content and online live experiences into the stream, and obviously creating a new stream of revenues that wasn't available and possible before. So these are the main thing we do: monetization, socialization, personalization, and multi-stream offering over existing streams. Just to complete with the showing you where we're going. So Texel is aiming to become a 200 million company within 3 years. And that is not something disconnected from reality. This year, we will be completing $10 million in sales. We are addressing a 500 billion streaming market in the forthcoming few years.
Really, I'm sorry for cutting you up, but we want to leave a few minutes for questions, and our next session is going to be starting in 4 minutes. Actually,
those logos are just representing our pipeline of clients, and the top logos are already clients. So we matching with the biggest of the world in the streaming era.
Thank you very much.
You're welcome.
Michael, I'd like to hear your questions on this. It's obviously a space that you're quite familiar with.
I think my questions come down to how will you change the nature of the experience from the user side? What is it that from a user, what will they view as different in terms of their experience with streaming services?
Thank you, Michael. So I don't think that I have a video from one or another reason, so I don't know. But anyway, you can still listen. So you're asking from the perspective of the audience, the viewers, or the streaming service?
No, I'm not from the audience perspective. If I'm a subscriber, what changes in terms of what you're able to do versus, is there a difference in the experience, or is this all in the back end?
No, the back end or the underlying technology is only made to change the experience. So what can you do that you couldn't do before? First of all, you can take the stream. Let's say that you're watching a game and you have it on your all devices, and then you can socialize on top of it. So invite friends from your mobile phone and have them watch party together with you. That's first ability, and very simple one. Then if you want to have premium content, like you want to open another 3 dimensions of cameras that was closed, you can open them, paid or not. Now you can have ad insertions, should you wish, as a streaming platform. Or you can rearrange your screen the way you want it. Like I want to have chat, and I want to have an influencer commentating my game instead of the broadcast. So you replace, or you add, you mesh your screen. You create an experience that simply wasn't there before. That's engaging.
This is very exciting. Very exciting.
Thank you. Thank you. And by the way, we are not a B2C company. We are fulfilling the demands of the fierce and the bold, and the list of wishes that they have is almost overwhelming today. Imagine shopping online, imagine gaming, the combination of gaming and watching and shopping with friends on the screen and on the mobile. You know, that's phenomenal.
Alexander, you have anything you'd like to ask?
No, I'm fine. I think, yeah, looks good and interesting.
Danny?
I appreciate the presentation. I definitely think it'd be helpful to, not right now necessarily, but see a demo of how the sort of multiple feeds, multiple sources and experiences that you envision would work. I have an idea in my own head. I've got 4 boys in my own house, so you know there's a lot of multiple.
Can I offer you something, Danny, which is enjoyable? On the App Store, both for Android and for iOS, you can download Texel Watch Party. It's a very simple, it's just a very simple app to watching stuff together. And just invite your boys. I also have boys, I do that. Invite them and try for yourself. Just the togetherness thing. That's the very basic thing.
Okay, now let me just ask you quickly, because we'll be watching the Ranger Flyers game tonight. Can I do this currently if I'm on Fubo TV, for example?
Yeah.
Is this as an app or as a web, or can this be done as a web interface?
No, it comes with your stream. You don't download us separately. We're not a B2C company. It comes, Netflix will offer this ability. NBA, direct-to-consumer proposition, will come with Texel Inside, and they will call it anything they wanted, the way they brand it through their own apps on their whatever smart TV, mobile, and PC.
Thank you very much, Aviv. Thank you,
Thank
Danny. Thank you for
You're
members
welcome.
of the panel. Just wanted to invite everyone who's on the panel to join us backstage. We have a separate link, so please follow there for the networking. And for
Yeah.
everyone else in the audience, we have now a masterclass with legendary investor Alan Patricoff. And in 1/2 hour, Michael Wolf will be giving his keynote on the future trends in media. Thank you, members of the panel. Thank you, startups, and see you in the next session. Okay, thank you
Thank
very
you,
much.
everybody.